Hello, good weekend to all. Bringing you a review of the US markets for the trading session Monday the 15th of March 2021. Please be sure to visit my site, and I'm very active on Twitter at trader_adil, and certainly obviously observe my daily market musings on there. Okay, in terms of the US markets then basically we have an interesting dichotomy here. There's obviously a stark contrast with regards to the Nasdaq and the obviously Dow, which we'll discuss very shortly in terms of the next potential market moves. Obviously the whole focus remains on yields, the dollar as well, and obviously with regards to the hawkish stance from the Fed, and obviously the more stimulatory stance obviously from the US government. Okay, and let's see how that's going to translate into the markets. It's been very interesting to see the move in Bitcoin over the weekend, given the fact that the stimulus checks are in. Okay, so obviously everybody's commenting on Bitcoin obviously pushing higher once the individuals get their stimulus checks. Obviously the money is going straight into Bitcoin by the looks of things. Okay, so that certainly doesn't bode well, okay, moving forward from that perspective. In terms of the health of Bitcoin now, it's a direct link between stimmy checks and obviously the price of the I wouldn't call it a commodity. I mean, what do you call this? I mean, it's just total utter speculation. That's basically what this is, and it certainly isn't going to end well. That's all I can say with regards to this. Okay, in terms of the markets then, so focus obviously has been on in terms of the stimulus checks, and that's exactly why you're actually witnessing the Dow obviously industrial average push higher, which you obviously have seen into new territory, and we continue to make new highs here. Weekly charts obviously are off the charts. There's no explanation really on a weekly basis in terms of the Dow Industrials, or should we say Dow 30, and in terms of the transportation average obviously we are pushing higher. Now there was a potential topping tail here, which I did expect the market to reverse and push lower on the back of that, and obviously you had a follow-up here as well on the back of obviously the concerns regarding the yield curve. But that certainly has been negated now, given the fact that ECB obviously has increased its bond buying. It looks like they're obviously front running the extra liquidity that's in the system for now, and that's really remains a focus. One would also argue that all the bullish news was baked in terms of stimmy checks, and that isn't the case with regards to further potential infrastructure pending as well, or talks regarding that pending going forward. In terms of the S&P 500, we are still at double top. Now the focus on this obviously topping tail here needs to be kept, an eye needs to be kept there in terms of the next move there. Now the Nasdaq certainly is keeping the S&P 500 at bay, as opposed to the Dow and the Dow Industrials that are obviously racing ahead, and the focus remains on the Nasdaq in order for us to obviously move higher in terms of the next move there. Now just cross-referencing the S&P 500 with the Russell 3000, again double top here as well. But the Russell 2000 certainly has broken higher, so that's certainly something that's caught my attention, and something that I'm going to keep an eye on moving forward. Looking at it from a weekly perspective, again, very, very bullish. We did have a obviously sell-off on the back of yields, and that certainly hasn't materialized. Excuse me, very sneezy this morning. Okay, so in terms of the daily chart, again, impressive, but look at the obviously reduction in volume. So as this move goes higher, we are getting a reduction in volume. That isn't a healthy sign. Okay, so just keep an eye on that as well. Russell 3000 really does paint the true picture, given the double top, which coincides with the S&P 500. Okay, so the focus really is on the Nasdaq, given the inverse relationship with yields at present. So the focus certainly obviously is on funding by the looks of things. Okay, and the cost of finance, should we say. Now the weekly chart on obviously the 10-year, the US bond market certainly remains in free fall. And one would expect until we get to this level at 130 to potential 129, the banana skin remains for the Nasdaq. Okay, relatively negative for the Nasdaq, given the fact that bonds are in free fall, given the fact that the sheer amount of debt the US is taking on, and whether or not obviously that translates into growth going forward. Again, that is certainly circumspect, and a lot of obviously suspicion and a lot of concerns are regarding that. This is why you are seeing a en masse dump in terms of US bonds at present. Okay, going forward. Now there has been talk or potential obviously indication with regards to China and US spat certainly coming to an end with regards to potential talks, but that certainly needs to be focused on, and it looks like the Chinese are certainly dumping US debt, and this is what's causing this potential sell-off in the US bond market. And obviously the sheer number of debt that they've got, whether or not they're actually going to be able to pay that back, that's the question. Okay, going forward, given the obviously infection rising there as well, and given the slow nature of the vaccinations and being embraced. Okay, so again, daily chart at the moment, we have obviously potential support here. If we do breach this, then obviously the dollar would obviously push higher given the inverse relationship with the US bond market and obviously the yield, okay, and obviously the dollar as well. So in order for these bonds to push lower, the focus obviously would be on a more hawkish potential Fed. And obviously more hawkish rhetoric there would send the bond prices lower, which in turn sends the yields higher, which in turn obviously sends the US dollar higher, which in turn hurts commodities, which in turn obviously punctures the S&P 500. And it looks like the focus really is at present is the Nasdaq. So given the fact that obviously the vaccinations are in full swing, the rotation out of work from home stocks, okay, focusing more towards value and growth, not value should I say, growth, given the economy potentially starting up again. There's a rotation there, and obviously the focus certainly shifts towards that. So if we continue move lower, Nasdaq obviously moves lower. If we move continue to move higher on this US bond market here, 10-year note, then you are looking at obviously the Nasdaq moving higher as well. So there's a direct correlation here with regards to the bond prices in the Nasdaq. So keep an eye on that. Okay, understood. Okay, so in terms of the US dollar index, let's quickly give you an insight there as well, given the relative nature of both obviously indices being intertwined. Okay, I actually got the bond. No, I don't have the US dollar. Yes, I do. Here we go. Okay, so daily chart, the US dollar. So it looks like it's coiling up for a potential move higher then. So position from here to here. Okay, and given the fact that nobody else really is hawkish right now, any potential obviously move lower is a buying opportunity for the US dollar for the next move higher, which in turn obviously causes a sell-off in S&P and the Nasdaq as well. So keep an eye on the next potential thrust there. In terms of the Nasdaq, let's just quickly give you an insight here. So we've had that thrust or move higher from the pivot low at 12,200. We've obviously faltered here around the 13,000 level. And the question is now, do we continue to push higher and close the gap at 13,500, or do we now move lower and retest 12,200? That's the focus. That will be the main focus in terms of the Nasdaq, and Nasdaq really does hold a clue. In terms of the associated indices with the Nasdaq, you got the biotechs that have bounced off after that bottoming tail from the 200 MA. That was an easy trade, really, from that perspective. But again, any bounce now will be looked at with immense suspicion and a potential of obviously selling opportunity as well, given the fact that the trade itself has certainly run out of steam. In terms of the other indices, again, would be your semicons. Okay, so semiconductors again bounced off that key support, and again, from my perspective, I would take the pivot high to the pivot low, and then potentially look for a lower high, and that certainly is the focus in terms of the tech stocks. So tech stocks certainly dictating here to a large extent. Okay, financials daily certainly very impressive in the back of obviously bond yields rising, so that certainly has helped financials, which in turn obviously has helped the S&P 500. Consumer discretionary now, again, given the fact that obviously rising yields is causing a concern, given the nature of disposable income being reduced, so keep an eye on that. In terms of commodities, from my perspective, certainly have hit a brick wall. Okay, hence the reason why that's one of the obviously strongest arguments or bearish arguments for the S&P. As you can see, US dollar starting to gain, Fed are now hawkish, which is obviously a pro-dollar, a bullish stance on dollar, and therefore obviously commodities are expected to roll over, which in turn is indicating resistance on the energy sector on the S&P. So this is one sector that I would certainly be happy to short. From my perspective, that certainly is the weakest sector really out of all of them, and given the nature of the dollar index, so that's something to certainly keep an eye out for. Certainly very, very bearish on commodities here, given the dollar obviously coming into support. Another obviously factor to watch out for there is USD CAD, certainly is obviously into support as well. US healthcare stocks not exactly pushing higher here, again remain vulnerable to a lower high. Industrial stocks are the ones that are doing very well, as you can see here. Weekly chart certainly is off the charts, or off the radar, shall we say. Very similar to the German DAX in terms of the industrials, certainly doing very well. Technology is, again, we've already obviously focused on the Nasdaq. It just basically is a series of lower highs. This is basically the trend line that we're following. Given the last pivot high was here, take it to the pivot low, and we're basically into that fib 75% where we expected to roll over. So interesting, and again a potential HNS formation certainly is brewing here as well. So just keep an eye on this potential next pattern for the S&P 500, or should we say the Nasdaq, which in turn obviously signifies a top in the S&P as well. And given the fact that the recent rally obviously has been with decreasing volume, that isn't exactly a positive sign. So no conviction there. Okay, so from my perspective, really the Nasdaq is the weakest link in terms of the. Also, this is a wisdom tree quality index as well, looking into hitting into gap fill and again looking for a lower high. So from my perspective, the weakness in commodities is indicating to me a potential top in liquidity, given the fact that ECB also stated over the weekend, toned down their potential, obviously increased liquidity there, stating that their unlimited bond buying going forward isn't exactly unlimited. It's only as of and when required. And they could certainly roll it back very quickly as well. So it looks like the liquidity taps are certainly closing. The only tap that's left open now is fiscal stimulus, but even that's certainly been baked into the cake, and the commodities are signalling so as well. The talk of potential inflation, again, there's always a time lag. Commodities certainly topping out, therefore inflation will certainly start to lag as well to a large extent, but the deflationary cycle may well have started. That's my understanding. As soon as commodities peak out, then obviously the deflationary cycle kicks in, and the real weakness we are going to experience now going forward, once all these stimulus programs are pushed back, and then obviously taxes are increased, etc., etc. So it doesn't bode well for equities going forward. That's my opinion anyway. Okay, certainly a top in liquidity and a top in equities as well to a large extent, especially the FTSE 100. That certainly is an index I'm going to be targeting anyway going forward in terms of short positions. And not short opportunities there. Okay, so I think that's a summation really in terms of the S&P 500. It'd be very interesting to see if we do break out above the move higher. But any breakout from my perspective will be a potential fake out and a shorting opportunity. Obviously, given the fact that the weakness in Nasdaq and obviously weakness in commodities as well, which will be a double whammy for the next sell-off. That's my interpretation. But nevertheless, we trade what we see. I was certainly wrong last week in terms of the European markets. Finished, I think, a negative 150 or 120 last week, so not exactly a positive week, but we live and learn as traders, and I wish you the best going forward. Keep an eye on that Nasdaq. The Nasdaq will dictate the S&P 500. If you want to trade the S&P, you must confirm the support and resistance from the Nasdaq and double check that. In terms of the Dow, that's super bullish given the infrastructure link in terms of stimulus there. It seems to be it's almost like giving an addict unlimited amounts of drugs. It certainly is high of its own supply at present, but the S&P is certainly painting a true picture in terms of the holistic view. So keep an eye on the Russell 3000 to see if that breaks out, and also S&P, see if that breaks out. After a short squeeze, from my perspective, given the fact that you've got a decrease in volume, it certainly will be a move lower. And again, any obviously exogenous variable shocks we'll keep an eye out for those as well. On that note, wish you the best for the trading week ahead, and be sure to visit my site. And I'm certainly active on Twitter. And those that want to join the live analysis service, details are on my site. And those that want to learn, obviously, the application, which I'm certainly obviously giving you an insight into in terms of intermarket analysis, you can certainly visit my site, and I can certainly set up a mentoring schedule for you. Take care. Goodbye now.